and asset manager Investec said first quarter net operating income rose by 11% as strength in its UK business offset weakness in South Africa. Joining me in studio now is Stephen Koseff, the CEO of Investec. Stephen, pleasure having you on the program.
Hi, Lenny.
Thanks very much. We're talking about the UK business operations doing far better than that of Australia and South Africa. What are the fundamental differences between these three economies that assisted in the UK being the outperformer?
I think there were two features in the UK. One is, we've had strong growth in funds under management in our asset management business, and that did very well. And then there's still quite a lot of opportunity in our capital markets business, and that did very well. I think, for the rest of the economies, we heard from Seki now, you had very low levels of activity. General economic activity is low. We've lost 1 million jobs in South Africa. There is very little demand. You talk about 0.9% demand for credit increase. I mean, we did see some growth in our lending books in South Africa, but there is very little economic activity, relatively speaking. And I think that's why, I was in favour of a rate cut, and I still am in favour of a rate cut, because I think, creation of economic activity and absorption of labour is very important to our overall economy.
Of course, you're alluding to the fact that a rate cut will be relatively beneficial. Do you think that the South African Reserve Bank missed an opportunity to cut rates? Do you think they're just postponing the inevitable?
I would guess that unless you see an uptick in economic activity, they will end up cutting rates. I think obviously they're worried about inflation, but there are inflationary pressures from electricity price hikes and wage demands. But I still think that job creation is going to be more important, and getting people back on their feet is going to be more important, and therefore we could do with lower interest rates. They're still sitting with base rate at 0.5% in the UK, 1% in Europe, less than half in the US, and we're sitting here with our base rate at 6.5%. Bearing in, one understands that there's a difference in structure in the economies, but that's quite a big gap, and that's why the rand continues to be strong.
Well, looking at the Australian operations and looking at the Australian economy, we know that the Australian government has been raising rates for quite some time now. Do you think that is also
rate hikes.
A dampener on operations in that country?
Look, I think what caused the problem in this last quarter is really the sovereign issue around in Europe. So equity markets came down, people got very nervous. So you were in a very funny cycle. And that has dampened economic activity, and people then hold off on investment decisions because they're not sure if we're going to have a double dip or not. So you get a lot of caution. I think one is moving through that now. I think that the stress tests clearly have helped a lot, although some people say the stress tests weren't harsh enough. Again, that's a debatable point. But there has been a lot of uncertainty, and you had a strong rally March to March, and then you hit this period of uncertainty this last quarter.
Do you think there's not more uncertainty in the likes of the UK and Europe, given that we've got so many austerity measures that have been put to the fore? Bank stress tests are supposed to have created some kind of confidence, but at the end of the day, where do you think we're headed?
I think that the banks, the major European banks, are quite sound. I mean, obviously, what the stress test proved was that there's a little bit of capital that may be needed to go in the system, but it is not that dramatic, and that the sector is basically sound. Obviously, governments have still got problems because they've just borrowed far too much money over the last decade, and they have to deal, and we've seen the austerity measures coming in. Now, how they'll try and balance the austerity is they will keep interest rates low for a longer period of time. So in order to keep economic activity on an even keel. So, like the UK is performing better than people would have expected.
Don't you think it's going to be dampened though because of the austerity measures, or do you think that it's
a question of the balance between austerity and interest rates? Because people have been saving, and you need the baton to be handed over from government to the private sector, and I think that's what will start happening if they keep interest rates low for long enough.
We're talking about bank stress tests, capital adequacy ratios implemented in Europe and the UK. How did that affect you? Because we know the capital adequacy for Investec PLC in the UK is 16.1%.
Yeah, I think we're fairly comfortable. We didn't have to do a stress test. They chose 4 banks in the UK that had to do a stress test. We believe that if we'd done a stress test, we'd have passed very easily. And we feel fairly comfortable with our current position, and I think that the UK banks are very soundly capitalised.
Taking a look at the retail banks here in South Africa, the retail space versus the investment space, we spoke about a possibility of another rate cut assisting the South African consumer. When do you expect the banking environment to really recover in South Africa?
I think you're moving towards the end of the impairment cycle, so I would expect that the retail banks would start seeing lower impairments going forward as they start dealing with as they move further into the recovery. Clearly, lower interest rates would help them quite a lot. And I think that you will see at a point in time demand for credit start picking up as people have started to repair their balance sheets. It may still take a bit of time, but certainly corporates are not in a tough space. Their balance sheets are all fine, they're not overgeared. I'm talking about middle to major corporates, and they're generating reasonable cash flow. I mean, they had the shock of back end of 2008, but their outlook is probably flat to improving from here on out.
Looking at Africa and, in terms of expansion, what are your thoughts? I mean, clearly it is an untapped market in most senses.
Yeah, we're obviously different to the retail banks because we're not going to go and put branches all through Africa. What we have is two areas of our business have interest in Africa. One is Investec Asset Management from 2 points of view. They have one of the largest fund investors in Africa with almost $3 billion of funds invested in Africa right through the continent. And they also try and manage money for African governments and parastatals and, investment arms of government. And so we do both. Then in the investment bank, obviously, we'd be in the ordinary course looking in investment bank and capital markets looking to do deals. And we may have some private clients from Africa, which we do have.
Stephen, would you say that Africa is, the last economic frontier? That's what it's been dubbed as. And apart from that, we know there's a lot of speculation about various other industries being interested in various companies in South Africa, and also banks, perhaps international banks, being even more interested in South African assets. How do you see that playing out?
I do. A lot of people believe that, Africa as a continent, I mean, the 900,000 people is going to grow between 4.5% and 6%. Now, that is not China at 10 and not India at 8, but it is still a lot higher than Europe, which is going to, limp along at 1%. So it is obviously a market that is untapped and that has a lot of growth potential. And that's what I think people are starting to see is, the emerging economies of this world handle this crisis a lot better than the developed economies. And that's because they just never had the leverage. And they never got the money before. So it is a place for people to invest, and I think, South Africa again proved in the World Cup what it can do, and I think a lot of people were quite shocked by that outcome, because a lot of people in the old days said, it'll never make it, and we really had a great World Cup, and I think, you're going to have a lot more investor interest, and if China and India keep requiring the commodities that they require, then Africa will really be one of the beneficiaries of that.
Stephen, very quickly, your views on the rand. It's been very strong. There's been a lot of noise around it, whether we should be intervening or not. Your view?
Yeah, well, I think, what a strong rand does is obviously weaken our manufacturing sector. It's good to have a stable rand. I've always believed it's good to have a stable rand, but maybe we could do with a slightly weaker rand at this point in time. We need to create jobs.